Today is Friday, the 24th of June, 2022. My name is David Hickson, and in today's market update, we're going to be taking a look at Bitcoin again. We're going to be focusing on the 1-hour chart, which has had some interesting things happen to it in the course of this week. I have other commitments on Monday, and so this video is being recorded early on Friday. I hope that you enjoy it and find it useful. So let's take a look at Bitcoin. And in the video that I recorded on Monday, and if you haven't seen that video, I would encourage you to take a look at that video before watching this video, because it'll make a lot more sense given the context that I discussed on Monday. In that video, I mentioned that the way in which I like to monitor price as it forms a trough or bounces out of a particular trough is to take a look at the shorter FLDs. We often receive emails asking whether the sequence of interactions between price and the FLD that I speak about in almost every market update video that I record, whether that sequence of interactions holds true for other FLDs. Because, of course, I mostly refer to the 20-day FLD. But in fact, the same sequence can be observed in interactions between price and every FLD. There is, of course, an FLD for every single cycle in our nominal model. And if you don't know what a nominal model is, I would encourage you to download the 10 Core Concepts document that I will provide a link to in the description below this video, which explains the basic concepts behind this approach to analyzing financial markets. And so the answer is yes, the same sequence does play out between price and every single FLD. However, there are some subtleties and some complexities which have to do with the harmonic ratios between cycles. I won't dwell on that here in this video, but it's important that you have harmonic ratios of 2:1 between the various cycles that combine to produce the sequence of interactions that we observe. Nevertheless, you can indeed track the same sequence of interactions between price and an FLD such as the 1-day FLD, which is what I spoke about at the end of Monday's video. Today's video is really just a follow-up on that, because I looked forward and I discussed how we would track the interactions that would occur between price and the 1-day FLD in order to determine the cycle shape of the 5-day cycle. So why am I doing that? The reason I'm doing that is because a trough has clearly formed in Bitcoin. I spoke about this trough in the video on Monday. That trough is potentially a trough of 20-week magnitude. And you can see that here on the 1-hour chart, that trough has been phased with solid diamonds. In other words, at the 1-hour chart time frame, the 20-week cycle has been confirmed in the analysis. Now, I'm not going to go into the complexities of confirming the different magnitudes of cycle troughs, but it's important to realize that because that trough is confirmed on the 1-hour chart does not absolutely mean that that trough has formed. What it does mean is that the software has enough evidence to confirm that trough with a certain degree of confidence. What's more important, I believe, than simply watching the software do it is to be able to do it for yourself. And the way in which we confirm the magnitude of a particular trough forming is by observing the cycle shapes that play out. And so, of course, the first cycle shape that we're looking at here on the 1-hour chart is this 5-day cycle. There is a trough of the 5-day cycle that has been found over here. It was found late on Wednesday, and if we measure the number of bars that elapsed from the position of the potential 20-week cycle trough on Saturday to the formation of this trough on Wednesday, I think it was, you can see that it occurred pretty much exactly 4 days after that trough. And so the average length of a 5-day cycle discovered by Hurst 50 years ago is 4.3 days. And again, if you don't understand why the average length of a 5-day cycle is 4.3 days, I would encourage you to take a look at that 10 Core Concepts document. And so at 4 days, we are only 1/3 of a day, or about 8 hours early in terms of identifying the 5-day cycle trough as having formed. So it is very likely that that is indeed the trough of the first 5-day cycle. So how does that help us, and how are we going to use that information? Let's just zoom in a little bit and discuss the cycle shape that has formed for this 5-day cycle. Now, the cycle shapes that form in markets are M shapes, and they are formed in this way. From the first trough, we move up to the peak of the first 2-day cycle. There's the 2-day cycle trough over there. And then we move down to that 2-day cycle trough. Then we move up to the second peak. And then we move down to the trough of the 5-day cycle. You can see that is an M shape. We then ask ourselves, is that a bullish or a bearish M shape? It's fairly obvious that it is, of course, a bullish M shape. To be absolutely pedantic about it, the way that you measure the bullishness of that cycle is you measure how much higher price ended the cycle than the point at which it started it. So you can actually measure that in price. And the fact that it ended the cycle higher than the point at which it started it tells us that that is indeed a bullish cycle. The next way that we determine the bullishness of the cycle is that we can measure how late the peak occurred, or I should say, where the peak occurred in the evolving cycle shape. If the peak occurs late, then we have a bullish cycle, because peaks occur late in bullish cycles. And if the peak occurred early, then of course we would have a bearish cycle. And so we clearly have a bullish 5-day cycle. Now, does this bullish 5-day cycle confirm that the trough that formed on Saturday was a trough of 20-week magnitude? No, not at all. But it does tell us that the trough that formed on Saturday was certainly greater than a 10-day cycle trough. It was at least 20 days because of the fact that we have a bullish 5-day cycle. I don't want to spend too long speaking about the complexities of these cycle shapes because it can get a little complicated. But this is how we monitor the unfolding cycle picture, if you like. The details that I wanted to focus on in this video today had to do with the interactions between price and the FLD, because I projected what we would expect in terms of those interactions between price and the 1-day FLD at the end of the video that I recorded on Monday. So I would encourage you to go back and have a look at what I was expecting to unfold. And now let's have a look at what did actually unfold, because there are some very useful lessons, I believe, in terms of understanding the way in which we can monitor the interactions between price and the FLD and also make some sensible trading decisions on the basis of those interactions. So we track a sequence of 8 interactions between price and the FLD, starting from a trough which is of at least 2 degrees greater magnitude than the cycle upon which the FLD is based. Because we are looking at a 1-day FLD, we need to start the identification of the interactions from a trough that is of at least 5-day magnitude. On Monday, I was already asserting that this was a trough of at least 5-day magnitude, if not much greater, possibly 20-week magnitude, and so that is the point at which we start identifying our interactions. As you can see, late on Friday, price actually came up and touched the 1-day FLD, but the first interaction that we are looking at following a trough of the correct magnitude is a price crossing above the FLD and reaching up towards the target generated as a result of that cross. That is the interaction that occurred over here on the 19th of June, so it occurred on Sunday, and that is labeled an A category interaction. You might notice, as a quick aside, that this FLD is in a slightly different position to the position it was in on Monday. And the reason for that is actually very important. The FLD is based on the recent wavelength of the cycle upon which it is based, and this is, of course, the 1-day cycle. As price action has unfolded, the software has positioned new 1-day cycle troughs over here. And I should point out this is a trough-based FLD. I have the peak analysis at the top of the chart, but the FLD we are looking at is based upon the troughs. And so Sentient Trader has found additional 1-day cycle troughs over here at the foot of the chart, and as it has identified each one of those 1-day cycle troughs, it has adjusted its understanding of what the current or recent wavelength of that one-day cycle has been. As it adjusts the measurement of that wavelength, so too it adjusts the amount by which the FLD is displaced. The FLD, of course, is a very simple line. It is median price, the mid price between the high price and the low price of each and every bar, displaced to the right by half of the current or recent wavelength. And so for that reason, plotting an FLD very far into the past is not really a very useful thing to do, because you have no guarantee that the FLD that you are seeing plotted in the past was actually there at that time in the past. It will shift only a small amount, and I would encourage you to go and take a look at the video on Monday to see how much this FLD has shifted. It is probably only by a bar or two. But the important thing, of course, is that the FLD needs to be interpreted at the current moment on the right-hand edge of the chart. That's another reason why I'm recording this video today. I didn't want to wait until Monday, at which point we would be looking at over a week in the past, and the FLD might have shifted even further. So the first interaction is this A category interaction. The A category interaction is expected to reach its target calculated by measuring the distance from the trough to the level of the price interaction and extending it up an equal distance. And so that is the target for the A category interaction. I mentioned that target on Monday. It looks as if though that target was indeed reached. The next interaction is where price comes down and finds support at the level of the FLD. I actually mentioned this interaction on Monday, and so at the time I labeled this as a B category interaction where price is expected to find support at the level of that FLD. It is expected to do so at about the time that the one-day cycle trough forms in the market. So now here is the first slight anomaly, or it's not an anomaly, but it's an interesting point to observe. At the time that price found support at the level of that FLD, we were still expecting that one-day cycle trough to form in the market. And so that seemed like a fairly good and viable position for that one-day cycle trough. Then price bounced away from the FLD in the C category interaction. Why has Sentient Trader positioned the one-day cycle trough over here earlier at about the middle of the 19th of June at this trough over here? The reason it's done that is because as price action has unfolded, it has positioned these longer cycle troughs, in fact the 2-day cycle trough and of course the 5-day cycle trough eventually, and as it has done that, it has been able to refine the analysis in terms of the position of these shorter cycle troughs. But at the time, that is where we were expecting the one-day cycle trough to occur, and we were looking at price finding support at the level of the FLD, which indeed it did. Now let's look at the 2-day cycle trough. Let me clear all of that, and let's just zoom in for a moment and focus on this 2-day cycle trough over here. Here are our interactions again, the A category interaction over there, the B and then the C category interaction over there. Then the next interaction, as I mentioned in Monday's video, is where price is expected to come down below the FLD in a D category interaction. It does that on its way down to the 2-day cycle trough. So let's work out where we were expecting the 2-day cycle trough. The 2-day cycle is exactly half of 4 1/3 days. So in other words, it is 2.15 days on average, or 2 days and 4 hours. At this time over here, which was at about 6 p.m. on Monday evening, 1 day and 22 hours had elapsed. So we were still a few hours early, 5 or 6 hours early, for the average length of a 2-day cycle. 5 or 6 hours is not a very big variation in terms of a wavelength of the 2-day cycle, and so we were certainly expecting price to come down and cross below this 1-day cycle FLD on its way down to the 2-day cycle trough. But here is the interesting thing. Can you see what happened? Price came down and actually found support again at the level of the 1-day FLD. It actually found pretty accurate support. It hardly dropped below that FLD at all. Although, a reminder, the FLD might have been shifted by a bar or two, one or the other side of where it is currently plotted. Nevertheless, price found support at approximately the level of the FLD. What is happening here? Well, our expectation is that price will cross below the FLD and generate a target to the downside for the 2-day cycle trough. When price finds support at this time, and remember this is a D category interaction that we're looking at, when price finds support at that time, instead of crossing down below the FLD, it indicates, and I'm sure you know the answer to this question by now, it indicates that there is a lot of bullishness in this market. So that was an encouraging sign, because we were looking at a potential bounce out of a big magnitude cycle trough. What would we expect when price is bouncing out of a big magnitude cycle trough? We would, of course, expect bullishness. And so it was not a great surprise to discover that there was bullishness in this market. I find it very interesting the role that these FLDs play in markets. As mentioned in a recent market update video, when we have a lot of bullishness in a market, even when we are expecting price to cross below an FLD, it will often come down to the level of the FLD and find support there. It's as if though these FLD levels are magical levels drawn in the sand, and the market tends to respect them. And so this was our D category interaction. Some people struggle with this concept. They are looking for price to definitively cross below the FLD. But you must remember that in a bullish market, price might not cross below the FLD, but will often find support at the level of the FLD. Or in a very bullish market, it might not even reach the FLD. Nevertheless, this was the D category interaction, and the E category interaction is where price crosses up above the FLD. That was very messy, as you can see, but the E category interaction occurs when price rises out of a 2-day cycle trough, when looking at the 1-day cycle FLD. And so you might, in fact, label the E category interaction over there, where price did actually finally get back up above the FLD, because it popped below the FLD for a period of a few hours over here. So we will label that as our E category interaction over there. It's important to remember that our sequence of interactions is identified not only on the basis of what price is doing when it reaches the FLD, in terms of finding support or resistance or crossing the FLD, but it is also very closely linked to the analysis at the foot of the chart. And so when we have price rising out of a potential 2-day cycle trough, we would not identify this period of support as a BC category interaction. It has to be a DE category interaction because of the fact that the 2-day cycle has been found in the analysis, or at least is due to be found in the analysis. Let's slide this over a little bit and see whether price reached its target for that E category interaction. Here, as I mentioned, is the E category interaction where price crossed back up above the level of the FLD. We would generate a target as a result of that, and simply using the grid lines as a rough guide, we can count up 1, 2, 3, 4 grid lines, and there is our approximate target. You might want to do it a little more accurately, of course, if you're actually trading this, but there is our target for that E category interaction. You can see that price over here reached that target and in fact exceeded it. Let's just drag the top of the chart down a little bit, and there we can see it. So it reached that target and exceeded it ever so slightly. So what is our next interaction? Here is our D category interaction, as price in fact found support at the level of the FLD as opposed to crossing down below it. Here is our E category interaction, as price crossed back up above the FLD. Of course, our next interaction is the F category interaction, which should give us a good short trading opportunity as price moves down into the 5-day cycle trough. So let's zoom back out again and see what happened. Here is the F category interaction, and that too generates a target to the downside, and that target, you can see, was reached over here. What happens after the F category interaction? We would then expect the FLD to provide resistance, and that is labeled a G category interaction, as price rises back up to the FLD, finds resistance, and then the H category interaction is when price drops down below the FLD on its way down to actually form the 5-day cycle trough. Let me zoom in on that and go through that in a little more detail. So here is our F category interaction, where price crossed down below the FLD and reached its target. It exceeded that target a little bit, which was a good sign because it indicated that the market was turning down in terms of it reaching down to the 5-day cycle trough. Then here was where price came up and found approximate resistance at the level of the FLD. That's our G category interaction. Remember that the G category interaction is where price finds resistance at approximately the level of the FLD. The H category interaction is where price moves down for the final move into the 5-day cycle trough. I do hope that this demonstration of the interactions between price and the 1-day FLD have given you an idea of how we interpret the interactions that occur between price and an FLD, and how we use those interactions to constantly gauge the mood of the market in terms of whether it is a bullish market, which is what we were expecting as price bounced out of a 20-week cycle FLD, or whether the market is turning bearish or is not behaving in a way that we expected. I think you will agree if you take a look at the video that I recorded on Monday, in which I projected what we were expecting in terms of interactions with this FLD. I think you will agree that what we were expecting on Monday played out very much as we were expecting on the way to the 5-day cycle trough. So let me just summarize this by going through these interactions again. Here we have our A category interaction as price crossed up above the FLD. Here was our B and C category interaction. Some people might argue that in fact the B and C category interaction should be labeled over here, but if you go back to the video on Monday, you will notice that I was labeling the B and C category interactions at this point over here. And so it's all very well to, with the benefit of hindsight, go back and move your interactions around. But indeed, I was identifying the B and C category interaction at this point over here. The D category interaction was where we were looking at the market coming down into the 2-day cycle trough. And the E category interaction is over here where price crossed back up above the FLD to reach up to the second peak of the 5-day cycle. Here is the F category interaction. Here is the G category interaction, and then the H category interaction for the final move down into the 5-day cycle trough. Now, some people assume that we should trade each and every one of these interactions. That is certainly not the case. Let's quickly speak about trading opportunities here. The first and most obvious trading opportunity is the A category trading opportunity as price crosses up above the FLD over here. However, as I've often mentioned in these market update videos, catching the A category interaction can be a difficult thing to do. Try and take yourself back in time to Sunday morning and you were looking at the potential possibility that a 20-week cycle trough had formed on Saturday. There was still a great deal of uncertainty, and many people were probably looking at the market moving further down. It would have taken a great deal of confidence to enter into an A category long trade. That is why an A category trade is often missed. I don't very often trade the A category trades, particularly when looking at the market on an intraday basis, because you just don't have enough confidence in that trough having formed when the A category trading opportunity occurs. The next trading opportunity is a B category trading opportunity. Now, I speak about a B category trading opportunity. The B category interaction is where price finds support at the level of the FLD. If you had been watching this market very closely, and if you had some confidence in that trough having formed, as I think you will see if you watch my video on Monday, I was certainly building up a good deal of confidence at this point, then you could potentially have entered a trade when price interacted with this FLD. Let me actually clear this and let's zoom in and just speak about that in some detail, because it's a slightly aggressive trading move, but I want to point out the signs that you would have observed. First of all, we were expecting a big magnitude cycle trough to form, as mentioned in the video on Monday. Then you get an A category interaction. What do we need to see happening? We need to see the A category interaction target being achieved, usually fairly swiftly with a strong move up, and ideally even exceeded. And so here you can see that it looks as if though the target was achieved roughly over here, and it happened fairly swiftly, and then the market continued to move upwards. That is exactly what we would like to see to confirm that we have a good candidate for an A category interaction. We then watch the market as it comes back down towards the level of the FLD. If it reaches the level of the FLD, if it touches it, we could take an aggressive B category long trade entry. That, of course, would in fact be a C category trade entry, to split hairs, because the B category interaction is where price comes down and finds support. The C category interaction is where price moves away from the FLD and moves upwards. So potentially we could have entered into a long C category trade at the level of the FLD. If we weren't quite so aggressive, we would have watched the market playing out over here. We would have looked for some very short-term trend lines, perhaps a very short cycle VTL, a 5-hour or a 160-minute VTL, and we could possibly have set our C category entry at the point at which price crossed above that VTL or trend line over there. That's of course just a possible trend line that might have formed. And so, in fact, our first trading opportunity that we really could have taken advantage of, in my opinion, would have been this C category trading opportunity over here for the move up into the first peak of the 5-day cycle or the peak of the 2-day cycle. Once the first peak of the 2-day cycle has formed, that trading opportunity is over. It's really important that you don't jump into a trade on the basis of the 1-day FLD and then expect that trade to last for many days. When you are trading the 1-day FLD, you are looking at trades that are going to last several hours. The next trading opportunity would have been presented by the D category interaction, where price moves down into the 2-day cycle trough. Now this is where the discretion comes into it. We have just witnessed a bounce out of a potentially big magnitude cycle trough. Are you interested in entering a short trade to track price coming down into the 2-day cycle trough? I wouldn't really. We have a very strong underlying trend. We have the 5-day cycle still moving upwards. We have the 10-day cycle moving upwards, 20-day, 40-day, 80-day, possibly even the 20-week cycle. Those cycles are all pushing upwards. How much of a move are we going to get into the 2-day cycle trough? Probably not a very big move. But of course that D category interaction could have provided us with a short trading opportunity. It would not have been a very good trading opportunity in my opinion. However, the E category trading opportunity would have been a very good one that we were looking for. And there are some people that I know that don't even catch the C category trading opportunity. They skip the D category. They are simply waiting for the E category trading opportunity following a trough of big magnitude, because that is the small little piece of the move that they are interested in catching. Again, that would have given us a good trading opportunity, which we could have benefited from for several hours as price moved up to form the 5-day cycle peak. This is where a dual analysis becomes quite interesting, because as you can see, let me just remove that marking here, in our dual analysis we do have a peak of the 5-day cycle, and so monitoring both of these analyses could have proved useful in terms of identifying a peak of at least 5-day magnitude. Then we had the next trading opportunity, which was this F category trading opportunity for the move down into the 5-day cycle trough. Again, would you have been interested in this short trading opportunity? You might not have, although in my experience a 5-day cycle is often a fairly clear cycle in markets, because of course a 5-day cycle will tend to play out within each week, and so it gives some structure to the price movement within a week. And so although we still had a very strong underlying trend with all of these cycles pushing upwards, there was a possible opportunity for a short trade as price moved down into the 5-day cycle trough. Our final trading opportunity would have come over here as price came up to the FLD and found resistance in the G category interaction and offered us a potential short H category trading opportunity for the final move down into the 5-day cycle trough. Would that have been a trade that we would have caught? I think possibly not. The reason for that is because price in a fairly bullish market had already formed a potential trough over here. It would have been a very early trough for the 5-day cycle, but it would have taken a very aggressive trader to have entered as price touched the FLD because they were expecting resistance. One way that you could have entered into that trade, and let's just zoom in here, is by again looking at the shorter cycles and possibly finding a shorter cycle that presented us with an upward VTL or any other trend line that connected this low here to this low over here, perhaps on a 15-minute or a 5-minute chart. As price came up to the level of the FLD, we were expecting it to provide resistance. Then as price moved down again below the FLD and also crossed below this trend line, that might have provided a fairly aggressive trader with a final short trading opportunity for the move into the 5-day cycle trough. But of course we must bear in mind that we are viewing this as a bullish market because of the very bullish cycle trough that might have formed last week on Saturday. And so short trading opportunities would have been very quick opportunities. There would have been opportunities you would have jumped into only to take a very quick little piece of profit because of the fact that we are expecting the market to continue in a bullish manner. What has happened since that 5-day cycle trough on Wednesday evening? Let's move this chart over a little bit and continue to track the interactions that have occurred between the 1-day cycle FLD and price. Here you can see, let's just highlight that FLD. Here is the 5-day cycle trough. Again, we had price coming up to the 1-day FLD, giving us a little bit of a messy resistance there, but it finally crossed above the FLD over there. That is our A category interaction following our 5-day cycle trough over here. Price then generated a target by crossing that FLD, which is up there. Price just about reached that target. I think it just reached the target and then moved down to a B category interaction. What do we expect at a B category interaction? We expect price to find support at the level of the FLD at about the time that the 1-day cycle trough is forming in the market. Here is that 1-day cycle trough, which now, of course, with the benefit of about a day's worth of hindsight, we have been able to position, but we were expecting a 1-day cycle trough at that time. Price was finding support at the level of the FLD. That was our very good C category trading opportunity for yet another long trade. Now what is happening? Well, price came down and found support at the level of the FLD again. That kind of interim interaction is not unusual, particularly when you are looking at very short time frames. Here is the nest of lows for the 2-day cycle trough. Is it possible that that was the 2-day cycle trough and that again we had a failed D and E category interaction? It is possible. Entering into a trade on the basis of that might be a little bit premature. We would need to give it a little bit more time, I believe. But let's measure the number of bars that we have experienced since that 5-day cycle trough on Wednesday evening. And you can see that there have been 41 bars. It has been 1 day and 17 hours up to the present time. The average length of a 2-day cycle, as I've already mentioned, is 2 days and 4 hours. So we are still looking at another 7 hours, which could elapse before that 2-day cycle trough is expected to form. One final question for you. What are we expecting in terms of the shape of this 5-day cycle? Let's zoom out just a little bit and discuss the shape of the current 5-day cycle. The current 5-day cycle is going to end at the next 10-day cycle trough. Here is the nest of lows for the 10-day cycle trough. As you can see, it's on about the 27th of June. And so what are we expecting? Here is our cycle shape for the first 5-day cycle, which I have mentioned was a bullish cycle, and it was expected to be a bullish cycle. The next 5-day cycle is expected to be more or less bullish. The answer, of course, is it is expected to be less bullish. Why is it expected to be less bullish? Because the 10-day cycle has begun to influence price to move down into the 10-day cycle trough here on the 27th of June. And the slight bearish pressure of that 10-day cycle is expected to give us a less bullish cycle than the one that we saw earlier this week. I do hope that you found this market update useful and interesting. If you have any questions, please put them in the comments below the video. I look forward to hearing from you.